Welcome to the Treasury Elite Leadership Series. I would like to thank all our viewers and members for supporting this noble cause of Treasury Elite, whose main objective is networking, knowledge sharing, and mentoring. Good afternoon, everyone. I'm Abhishek Goenka, founder and CEO of IFA Global and Treasury Elite. We bring in one-stop treasury and FX solutions for companies across India over the last 16 years. Today, we have Mr. Ganesh Rengaswamy. Ganesh is a seasoned entrepreneur and a venture investor. He's a co-founder and managing partner at Quona Capital. Of course, Ganesh has invested and advised leading financial institutions and banks, including SKS, Ujjivan, Equitas, Northern Arc, Vistar, Tech Process, and Bandhan. One of his latest exits has been India Mart, which was very much into news. So welcome, Ganesh. How are you doing today?
I'm doing very well. Thank you. Thanks, Abhishek, for having me on the chat. Really appreciate it.
Glad to have you today as a part of the Treasury Elite Leadership Series. The next few minutes, would love to know about your experiences and some of the latest trends in the VC space. So, Ganesh, this is my favorite question, and I ask to everybody, is that what are the common thread which I could link with a lot of global CEO is that they're just not doing this about the money. What keeps you excited every morning and get to work? Or if I may ask, what is your why?
Yeah, it's a good question. In fact, I was having a chat with one of my friends who was hosting a sort of fireside session and saying every year, end of year, I pretty much ask myself the question. We thankfully have a little bit of a downturn last 10, 12 days. And I ask myself the question if I'll be back next year. Thankfully, the answer hasn't been no so far. I think the day the answer is maybe, I'll have to start reflecting on why maybe. But we haven't got there so far. So my answer may not be as deep as you expect right now. I'm just excited that every year the answer is emphatically yes. But it's a good question. I think you're right. At some point, clearly, we are going to make a difference or impact if we are able to enable our portfolio companies and our firm to back successful endeavors. We are definitely not going to make an impact by running a parallel calculator on how much monetary benefit that's going to deliver to us on a daily basis. So yes, the reality is as you get into these things, it's a lot more about providing the right kind of support for portfolio companies. I think for us, the biggest mission is backing entrepreneurs who are actually able to create deep impact in emerging markets. I started my career at Info, and there I was in the Valley, mostly working with some of the largest financial services firms and internet firms. And then I started my venture capital career in the Valley with Greylock Partners. But the move back to Asia for me, which is, by the way, very reflective of the stories of my partners as well, was for a very deliberate reason that we wanted to back entrepreneurs who would help create impactful solutions in our respective markets, whether it's India, Brazil, Indonesia, Nigeria, Philippines, Vietnam, so on and so forth. So I think backing these entrepreneurs, helping them, enabling them in any way possible to have the relevant tools to go out and succeed in a pretty tough environment, entrepreneurial ecosystem, and to be able to grow Quona, which in itself is, by the way, an entrepreneurial venture for us. We started from scratch 7 years ago, and we have been fortunate to be where we are today. I think being able to make both of this happen is what really keeps me excited. And I think seeing the vision with which we started Quona getting fulfilled today, and having the opportunity to work with these entrepreneurs who are creating phenomenal successes, I think really what keeps me excited. And the last bit of this is, sort of maybe a personal, a very personal cause, or I would say selfish cause, which is I realized that being an entrepreneur on the operating side is not easy. I've been an operating entrepreneur multiple times, and fortunate to see some of the outcomes we saw. But being on the other side and being able to support a much broader base of entrepreneurs to succeed, I think hopefully has a more catalytic effect. And I thought it's an easier job to do. Frankly, I was completely mistaken. but now that we are in it, I think where we have got today is exciting, and that's what keeps us going, or keeps me going.
That's pretty exciting. In fact, you know, that was my next question, that you have had uh, your journey as an entrepreneur in Travel Guru, and then a series of other ventures where you've been advising promoters and companies. But I've had your own shares of ups and downs. So, what are your important milestones and learnings in your entrepreneurship?
Oh, that's actually, I can write probably, volumes, or maybe a set of 3 to 4 books on that, in terms of number of mistakes that I have made over the years. But if we were to focus on a couple of key and emphasize couple of key learnings. Yes, there is one thing I've realized is there is absolutely no substitute to persistence. And I know brilliance is essential, but brilliance is probably overrated in entrepreneurship. It's really about persistence. Like India Mart, Dinesh Agarwal and Brijesh are exemplary role models. Who were at it for 20 years, and today amongst the most successful digital entrepreneurs in the country, both from a business perspective and financially. In fact, I was just reading a story before getting on this call by one of my friends, who's a cricket commentator, about a Sri Lankan cricketer who went on to become the captain of the team after being rejected for 6 years or 3 different turns. So it's all about persistence. So that's, I think there are no two ways about it. Secondly, I think as Mike Tyson famously said, all plans, you have a strategy and a plan till you get punched in the face. So it's pretty much like that. Once you get into the arena, I think there is a 99% chance your plans are going to go out of the window. So the only thing constant in life is actually change.
Correct.
And I think number of us are taught this even through Bhagavad Gita in our lives, but you really realize it when you go through entrepreneurship on a daily basis, that change is the only constant, and hence we should not take our plans for granted or treat them very sacrosanctly. We have to be nimble and be ready to embrace change. I think lot of times the shock or disbelief that we are being forced to change or forced to pivot, or things are not going as per our plan, actually disturbs entrepreneurs more or frustrates them more. If we accept that it's bound to happen, I think we'll react to it a lot better.
Wonderfully said, Ganesh. How do you see this trend emerging? And are we moving towards a growth stage kind of a private equity, just from a venture, which India was earlier more of a VC kind of a space?
Mm-hmm. Yeah, that's a fairly loaded question, because obviously the venture space itself has become very deep in India, and where people used to say early stage, growth stage, late stage, and now you have all the alphabets. You have pre-seed, angel, pre-seed, seed, pre-A, pre-B, B plus. You have all kinds of stuff, right? You have then pre-IPO and F, G, E. We have all the alphabets now, because and in a way it's good. It says the space has become quite deep. So the good news is, I think on a secular basis, we're going to move forward, because capital is even more essential. Dumb capital can lead to destruction of value quite significantly, or lack of even creation of value. So smart capital is essential. And I think in this huge deluge of investment rush, we are seeing some smart capital, and we are seeing lots of capital, which is good. I think lots of entrepreneurial ventures will flourish. I think a few will sort of fulfill their ultimate goals and become extremely valuable companies. Several may not, but that's why I said on a secular basis we will see the march of entrepreneurship in I think in lot more competent way, and with lot more flair than we have seen in the past. Along the way, I think we are going to also see lots of corpses, because there is a lot of what we call FOMO money, and people rushing in because they feel like there is a gold rush and we have to be in. if I missed out on the previous cycle, I need to get into this cycle. There are people who have never done venture capital, and given the nature of public markets and limited investment opportunities on the back of COVID, etc., also you are seeing more capital rush into private markets. You're also starting to see people really follow there are a few leaders and a whole bunch of followers. We are starting to see lots of followers who are also blindly investing pretty significantly against some of the trends. So I think where there is opportunity, you will see all of this anomalies as well. So in that sense, we are going to see some, we will certainly see some modest failures. We'll see some fantastic failures, like companies having raised a lot of capital, couldn't figure out their product market fit, or couldn't scale beyond the early adopters, and they are going to fail. But on a secular basis, this is a march of entrepreneurship, and we are going to see Indian entrepreneurship at a whole different level in 10 years. I mean, even if you look at 2010 versus 2020, I think we have seen successes, we have seen talent, we have seen capital, so on, and products being created which were unthinkable 10, 11 years ago. So overall, it's a great positive trend. Along the way, we are definitely going to see blips, because it's in some ways it's there's overheating, and then you need a cooling off period, and then you again go on the secular march, and then we are going to see that kind of an oscillation for sure. The one more quick point I'll make there is we are definitely going to see entrepreneurship beyond classical tech, right? And in a more nuanced way than people typically think about it. I think as we move forward, we'll stop seeing world as tech and non-tech. No, most likely we are going to start seeing businesses where, yes, there will be core tech businesses. There are smart SaaS businesses and core tech businesses for solving specific problems. But we are also going to see that tech as an embedded solution to solving smart problems in fundamental verticals. Now, whether it's retail, whether it's agriculture, food, so on and so forth. So I think tech will become embedded as a part of number of fundamental daily life need solutions, which, by the way, also weaves in a lot with how we at Quona think about the world, as opposed to the past, where you used to see there used to be clear segregation of VCs will back tech companies and they won't back non-tech companies. I think we are going to see a lot more confluence of these ideas going forward, which I think overall is good for the economy, because venture capital or growth stage funding is not in isolation about backing certain esoteric ideas to make a lot of money. It's actually about making an impact and difference in the ecosystem and economy.
So are you seeing this emerging as a very solid asset class also for family offices and ultra HNIs in India?
It is starting to emerge as a strong asset class for sure. I think that's a great question for a couple of reasons. One is it is emerging as a strong asset class now. There is a better understanding. Having said that, these things are nuanced. For example, there is a significant challenge between, let's say, a family office investing direct in a company versus investing in a fund, right? And there is a reason why specialized fund managers exist, and some people do well and some don't. But I think that realization that specialization is of value takes some time in India, because we are a country where we have seen generalist corporates succeed. If I have capital, I can do anything, sort of the mindset. I think it's changing. We are seeing some value in specialization, but we haven't gone all the way. So even for family offices, I think to recognize that, hey, there is a specialized nature to this, and you can easily lose money. Or there's a certain way to do evaluation, to think about portfolio management, working with companies, value realization, etc. I think that maturity has to still set in. I think the process has started. So good news is process has started, and that's part of asset class creation as well. That education. It's not only about people willing to put capital in this space in VCs or growth funds. It's also about that education. The second dimension of this asset class challenge for the Indian ecosystem is the world. As the world is getting specialized, the world is also starting to get somewhat more integrated in terms of transferability of ideas. Smartphones are great levelers, so on and so forth. I think 15 years ago, or 20 years ago, there's not a chance that we would have that kind of, we did not have that kind of a leveler around the world, right? But whether it's India, Indonesia, Brazil, US, smartphone is a great leveler. Access to information is a great leveler for folks with smartphones. Or Facebook is a great leveler, so on and so forth. So the point is, I think one of the big handicaps India has from a regulatory point of view is the limitation that successful Indians have in the ability to be able to deploy capital domestically and internationally. And there's a lot more handicap internationally. And part of our own learning process also is going to be flexibility in smarter international capital deployment to learn from there, and then maybe figure out how to do it yourselves or do it better at home. I think it's a significant handicap of both actual capital deployment and of and a mental limitation, frankly, because it hugely restricts our ability to learn, and a restricted ability to learn restricts our ability to grow more creatively as an ecosystem. And sadly, I think we haven't realized this yet, as from a regulatory perspective.
From a global investor point of view, I was talking to somebody, a friend of mine who was in Chicago, and he had few thoughts on the VC space in India and a few challenges companies are facing here, because of which it was getting difficult for him to talk to his global investors. What are your thoughts? What can change in India to make investors more comfortable? Of course, one is a depreciating rupee, which eats away 3-4% of your capital every year. But what else do you feel that can be changed, which will probably help global investors to have a more positive approach towards India?
So I think I will answer that, but I'll also contradict that, saying one of the things I've been saying very openly is there is way too much interest in India. Right? I think we are too open, and as a country, not, we are never too welcoming is the wrong thing to say, because we are always welcoming and we should be. But if you look globally, if you compare the deepest private investment markets in the world, venture markets in the world, I think compared to US, China, Europe, India scores much higher in terms of anybody from the world freely comes and invests in the country, from Russians to Koreans to Chinese to Japanese, investors from Southeast Asia, Europe, US, India, of course. So we have probably the broadest base of investors from anywhere in the world. It also means that it's a highly competitive ecosystem. And having said that, there is also a level of opacity, right? It's a large country. There are significant smart investors. The country is big enough that there are number of companies that can operate within India, with only India as a market also, even though that's now. But and it's a complex country, like you look at the languages, cultures, everything, so it's not easy for folks to understand, which also sometimes makes it quite challenging. Having said that, that hasn't stopped the country from being inundated with global investors. On the other side, in terms of what can be made easier, quite frankly, we need to see some phenomenal successes all the way to ultimate value creation and exit. I think we have seen quite a few in the last 5 years, but for a market that is of this much interest and at this scale, and obviously seen as an up and rising and growing ecosystem, we have to see more successes, because what's to be seen is the ratio of capital that's gone in to the value creation or successes, the ultimate successes that have been created. And if you compare that with the US or UK or China, I think we have some distance to go, and that really will give people confidence that it's not just about the valuation markups. It's about the ultimate outcomes, and we need more ultimate meaningful outcomes, whether it's IPOs, whether it's acquisitions, whether standalone companies going public and becoming large in their own right. And part of that also is it's sort of super app platforms, and we don't have any. It's like distribution highway. If you look at some of the larger markets, if you look at even US, and if you look at China, there are digital distribution highways today that have got created, right? I think before the Chinese government, Chinese government, pointing out some of the challenges, ecosystem of businesses of Ant Financial and when they were fully integrated, you could see that they have built large digital distribution highways, which even beat physical FMCG companies now by far. I don't think we have yet reached that point in India, even though we have had digital rails being built for almost 15 years now. So I think we need to see that ultimate value creation. We need to see domestic ownership of some of these rails and large scale domestic successes for people to start saying, okay, you can build massive in India for India and deliver end outcomes. I think we are somewhere, we are getting there, but we are not yet fully there.
Right, right. Great, Ganesh. It was lovely talking to you. And we got some very fine perspectives on what's happening in the VC space. What are the opportunities for India? How is this becoming an important asset class? How are people looking into it? And of course, some of the traits that you guys look while investing in companies. So I'm sure all the guys who will be watching this will get some ideas what Quona or firms like Quona look at while selecting their entrepreneurs and what's their wish list. And I'm sure it will not be very different with the other VCs also. So great, Ganesh. Thanks so much for taking out time. It was lovely talking to you today. And I wish
Thank you, Abhishek. Really appreciate
all your partners and Quona a lovely future and an investing journey going forward.